One. Good morning, traders and investors around the world. Welcome to this Wednesday with Wedbush edition of Pre-Market Prep Plus. Joel Elconin here with Dr. David Nierengarten, who covers some of the biotechs that cover the oncology section, joining us today to talk about the recent merger that is in jeopardy and also some stocks that are on his radar. Let's recap the markets before we do that. We are trading on the lows of the pre-market session, down 21 handles at 41.37.75. Really, COVID China worries, really the biggest catalyst here to the downside in the markets. The dollar's up a couple pennies here, still hanging out, trying to prove you can have a bid above the highs of last week. Bonds are up 6 ticks at 127 and 4/32. Finally broke that long losing streak. Crude down with the China worries, a little different here. You would think crude would be down, but that's up a $1.12 at 74.03. Gold in the green by 750 at 1982. Silver going the opposite way. That's down about a nickel at 23.57 and a half. Bitcoin futures kind of quiet over the last 6 sessions. A little bit of a trading range, but for today, currently trading down $515, 26,685. Let me bring in Dr. David Nierengarten from Wedbush Securities. David, how you doing on this Wednesday?
Doing just fine.
All right, let's just talk just overall, like the kind of macro environment here.
Yep.
Like for what you cover, for what you do,
Yeah.
like the debt ceiling. I mean, like how's that going to factor into anything?
Yeah.
Yeah.
I mean, a debt ceiling doesn't have a huge impact except on the overall market, right? So, yeah, sure. If everything blows up, biotech will blow up too. That's not a great insight, but I don't think
No, it's the truth. But
yeah.
interest rates do matter to a lot of these companies that are carrying a lot of debt, and they in order to fund the new projects and stuff. And I mean, as much as people want to call like for a change in the interest rate policy, it still looks like we're going to be either higher for longer or stable for longer. How is this affecting some of the biotech companies that you cover?
Yeah, the main effect for interest rates, as we've seen over the past year, 2 years, is that it really diminishes investor appetite for some long-term assets, right? And capital-intensive assets. And so we've seen a bit of a hit on earlier stage biotechs, on biotechs that need a fair bit of capital or more than a typical amount of capital to develop those projects, like say, new cell therapies or gene therapies are more capital intensive than say developing a small molecule or an antibody therapeutic. And so a lot of those companies have been hit harder than the overall biotech market, even though it's hard to imagine given, a lot of biotech stocks are down 70 or 80%, but hey, you can be down 90% too. So, that's been the main effect of interest rates, in my opinion. What we've seen too, is of course, I don't want to say giving up, but a lot of biotech saying, I don't want to be independent anymore. And, some pharma's coming in finally and acquiring them, which really picked up actually in the beginning part of this year. We have had over $70 billion of announced M&A deals year to date. And last year, the total was $70 billion, just under $70 billion of announced acquisitions for all of last year. So, we're seeing a definite pickup, in my opinion, on that. And then we have the pushback from the government here as you pull up Horizon and Amgen's charts. So
let's talk about that.
Yeah.
I mean, first of all, I mean, I'm sure over the years you've been covering companies that have gotten takeout, offers, and then they trade a little bit of discount to that. You're thinking, I'm going to hold on. I'm going to get the whole enchilada, right?
Get those merged ARB guys in there. Come on, yeah. Guys, lever it up and go for it. Yeah.
And then the waitress comes and takes away your enchilada here. So what we talk about on the show, one thing we try and be consistent with is, hey, why hold out for the other, $6, $7 on something like this? Why not ring the register? And
Yep.
here you are, you had all day and a month, a couple months to sell Horizon Therapeutics at the 110 area. You
Yep.
wake up the next morning, it's a 90. Technically, I don't even know what to tell anybody. It's in the middle of the no man's land. It looks like they were a little down, when they said, hey, we're blocking the deal, but then you got a little bit of relief. What is this company? Is this going back to $80 if the deal comes off the table? And what's the status of it? What are you reading between the lines and Jim and the HCNP?
Yeah, I mean, I can't argue with a return to pre-merger, trading. I mean, I don't cover them officially, so
Okay.
I don't have a valuation on you, but I can't argue with that, and I would expect that just from logic. It would logically trade back to where it was if the FTC successfully blocks this deal. What you're seeing in some of the recovery, that initial drop down to the 90 range, and then the recovery here a little bit into the $100 range is increasing skepticism that the government's going to win this case. It's really, I'm no lawyer. I'm the furthest thing from a lawyer, but the idea that you can block a merger because a company might do something in the future involving bundling drugs that have never been bundled, and they might be able to extract some price increases out of that is truly novel, to say the least. I have a few other words you probably don't want me to say, but we can imagine them about that argument behind the
Okay.
government's case here. So
Yeah, we're a PG show here. All
yeah,
right, well let's get into your area of expertise.
yeah,
This is stocks that you've been covering. Blueprint, Mads Corp. Tell us a little bit about them, and I just
yeah.
see that recent move from 52 to 60 on the daily. Well, that looks like a huge move. I got to get out, but then you look on the longer term chart, and you're like, hey, this was a triple, three-figure stock. Talk about the recent move, the sustainability, and what they have going forward.
Yeah, I think, this is a nice spot and was a nice spot, of course, earlier to buy this thing. And I'm not sure if we talked about it, but, what caused the recent move just a couple of days ago, of course, was the expansion of the label for their marketed drug, Avakit, from a rare disease called advanced systemic mastocytosis to indolent, or a less advanced form of the disease. So it really broadens the market from, 1,500 patients or so, again, very rare disease, and to an additional or incremental 7,500 or so patients in the less advanced form. And so obviously that's a significant increase in available patients to treat. I think that move was justified, number one, but I think, there's room to grow from here as they launch into that market. This really should be a $1.5+ billion drug eventually as they get into that market. And so, and they wholly own it. And so I think, again, there's a bit of room here. They have some pipeline candidates that they're going to have additional data for at ASCO, which is a big cancer meeting in Chicago the first weekend in June. And so, hopefully people can get a little bit more excited about their pipeline like they were last year before. I think they got dragged down with a bit of the biotech downturn, and then they did have, admittedly, a lowered guidance event that pulled them down a little bit, in the recent months. So, hopefully they've turned that around. They have that additional indication and some pipeline news coming. You're on mute.
Do you have a price target for BPMC?
Yep, $75. Yep.
Well, okay. All right, that's not too far away. Okay, let's move on to another issue, and I'm going to take a look at the chart before you say anything. Okay. Cogent
Yep.
Biosciences. Now, I know you have talked about this one with us recently. You got a little pop to 1250 in May. That quickly faded, came back down to 1050, and kind of right back in the middle here. Talk about the reason for the pop, maybe the reason
Yeah.
for the drop, and prospects moving forward for Cogent Biosciences Inc.
Yeah, so Cogent it's almost a derivative play on Blueprint. So they have a drug that they're developing that has a similar target. They think it's going to be better tolerated, maybe a little bit more efficacious because they can dose it higher. And I think some of the recent moves were trading off of Blueprint's positive announcement for their drug, and the idea that Cogent could be kind of a fast follower in that market with maybe a bit better tolerated and more efficacious drug. They're also going to have some data that first weekend in June at ASCO regarding their drugs trial in GIST, which is a rare stomach tumor, where it should also work along with the mastocytosis indication that Blueprint has their drug in. So, they've been trading, bouncing around a little bit, I think, on derivative news here, but they should have some of their own data coming up that they can trade higher on, hopefully with positive news.
And do you have a price target for Cogent?
Oh, this is embarrassing. I do. I can't remember.
That's okay. Don't worry
Head.
about it.
It's higher than where it is. We're outperform rated. I apologize.
Okay.
Yep.
That's okay. No big deal. All right. Let's move on to another company in your area coverage. And whoa. Marsana Therapeutics, the old Gap and Go. This was back in early May. They got the news and they ran with it 1, 2, 3, 4, 5, 6 days in a row before you topped out over $8. A little bit of a pullback here. Talk to us about what they're doing right over there at Marsana Therapeutics.
Yeah. So this is another beneficiary of someone else's news, which is kind of interesting. The stock was trading really at a depressed level relative to their prospects. Of course, in my opinion, they have a phase 3, important readout coming out in July that they're, hopefully it'll be positive. But they were trading really, again, depressed given the proximity of that data. And what happened here is Immunogen, which I don't cover, IMGN, announced a positive readout of their trial in ovarian cancer, similar indication that Mersana is going after, but a different target, different patient group. And so Mersana benefited from that move in Immunogen. And again, a little bit surprising, they held on to those gains. And I think as people are holding on in anticipation of more positive news with their readout in July. The other thing that's helped them is that, speaking of announced acquisitions, the Pfizer Seagen acquisition, Seattle Genetics also operates in the space of antibody drug conjugates, these targeted chemotherapies essentially. And that's where Mersana works too, is in the ADC space. So similar technology benefiting from that merger announcement, plus benefiting from a peer with a successful study, led to those moves and sustained level here at $7 to $8.
Okay, yeah, they'd taken a look at the chart on that one. You got the pullback, and let's see if you can get back up to those elevated levels.
The next move will be in July when they have positive data. Yep.
Okay, that's what you're saying. Okay,
Yep.
and let's go to another one that you're looking at. This is an ADR. Whoa, Argenx. Yeah.
Yep.
Whoa. Can this rally continue? What are they doing right over there?
Yeah, so this is another name benefiting from two things: M&A speculation and their upcoming data set also in July. So they have this marketed drug called Vyvgart. It's approved in myasthenia gravis, a neuromuscular disease. They have a label expansion opportunity with a phase 3 in July. That's almost as big, or just as big at least, a market as myasthenia gravis. And then the M&A speculation here. This is a first-in-class, best-in-class drug, in my opinion. It's ramping to $1 billion plus, sales ramp here in the near term. I think it's got a lot of room to grow. It's multiple indications, potential approvals coming up over the next 1 to 2 years. I think a pharma company would be foolish not to buy them, honestly. And so, yeah, so that's been lifting the stock here. Has been that speculation.
Yeah.
Yep.
Nothing like good old takeout rumors. You put a bid underneath the stock, right?
Nothing like doubling your sales, every year too. So
fundamentally. All right. What about is there anything we've talked a lot of positive here.
Mhm.
on your issue cover. Is there anything in your area coverage that's been disappointing, underperforming that you want to bring attention to our traders and investors?
Not, gosh, not off the top of my head. I think
Okay.
if we've had a nice lift in the small mid caps lately. We can argue lots of things are undervalued, but we've had a nice little rally here in the small mid caps. Um, you know, on the flip side, I'm a little worried speaking of the budget negotiations, if they continue to be, pushing on, drug pricing and such, that's obviously a bit of a headwind for
Okay.
folks with approved drugs. But again, we've had some great M&A trends, and hopefully that continues to provide more of a tailwind here.
Hopefully the government doesn't get in the way too
Exactly.
much.
Yeah. Hopefully they
Yeah.
lose that case, honestly, and yeah, we continue to have some good M&A here.
Dr. David Nierengarten covering the biotechs, especially in the oncology area for Wedbush Securities, joining us here this morning. Thank you, David. We always
Thank you.
appreciate your insight into the to this difficult sector to cover, and we'll get you back on again soon. So thank
Sounds
you
good.
very much.
Thank you.
All right, S&Ps, they keep trying to rally. They keep trying to distance themselves from the low before the start of the regular session, and you know what? They're not doing a very good job. We're currently at the lows of the session, 37 and a quarter, currently trading 37.75. So the buy the dippers have not emerged yet here. 11 minutes going into the opening. We got to talk about the coals here, and the coals with they got some short covering going on. I talked about the importance of the 22 area. Well, see ya. I don't want to be ya. You are through that area with some speed here. The strength of retail. Let's get the 30-minute charts out. We got the breakout here over that $22 area. I know Triple D is happy about this because he's looking to exit this stock today. Where are we at? We are quickly approaching a pair of highs at 22.76. Actually, two highs, 22.55 and 22.76. Those were the highs back at the end of April. And then if that's not good enough, you got a pair of highs splitting 23.30 just before that period. So there you go. Coles on the move. ANF, which got a bid earlier. That is still not back at the pre-market high. Not as much enthusiasm on this one yet, but we'll be looking for a similar move in Coles from Coles if we could get through. That pre-market high is still a buck away at 27.75. And Urban Outfitters, we mentioned that. Boy, oh boy. Think about the monthlies here. Is you really haven't spent much time over 30 since December of 22. That's a long time ago, almost a year and a half ago. So important for Urban to hold 30 off the open. Pre-market high comes in currently at 30.36 at that bracket a few different times. Let's move on here. We do got probably some short covering. Boom, boom. Florida is mentioning some stocks. Target under pressure. Now retailer going the wrong way. Not much there to say. Trading down another buck 34 in the pre-market. Let's see here. Starbucks SBUX had its earnings and it's having some problems too, down 21 cents. Really no major support in this one until you get under $100. The 97 to handle, that's still $3 away. So there are some intermediate lows there, your daily lows that you can look at, but Starbucks are pulling back hard off that 115 level. Ulta, ULTA, we mentioned this one. It's been under pressure. Don't like when a stock is at the bottom of a monthly chart and it's down again 55 cents. So can't think about anything on the long side, or if you're looking for potential short here, the closing price of 480.61 is important. things are light here between 460 and 480, so you can pick your poison here of different levels. But as far as daily levels go, if in fact you can't sustain a bid at the 479 area, the next daily low comes in at 471.63, and then the low for the year at 466.62. So there we go. Taking a look. Coal's at 24. Hey, it's got the momentum going. We'll see if it can sustain it off the open. Grove Lane hopping in there this morning. Asking about STWD. Now, I don't know anything about this stock. Starwood Property Trust. Wasn't there some I don't know. I thought I heard some merger and acquisition in this. I'm not sure. But what I can tell you about this one, and this is just pulling the stock up for the first time ever, looking at it, this $18 area, you topped out in April at 1806. And this month you've topped out at 18. You're trading up 16 cents. If in fact when this can get through 18 and establish an 18 bid, not sure what the whole reason for this big fall was, but that would be a sustained breakout. Now you have moved up from 16 to 18, so if you can break above 18, maybe I'd like to see a little bit of consolidation where you establish some lows in that area and then boom, make your way up above 18. But I don't know. For some reason, also check the merger and acquisition on this. I know it was Starwood, or I think there was some other hotel properties that were mentioned. I think it was yesterday or two. So a lot of times, if you hear about M&A in a sector, it could provide a boost to other issues in the sector. I sure hope that this Starwood Property Trust is still the company that I'm talking about in the sector. Let me take a quick look on this one to see if we have any relevant news on this. That would be STWD. Starwood Property Trust Inc. It did last week get a strong buy from Raymond James. That's the last relevant news I saw on it. And looking at the company's fundamentals here, real estate engaged acquiring commercial mortgage loans, commercial mortgage-backed securities. So it's not the Starwoods that I was thinking of, but I will go back to keeping an eye on the importance of covering 18, uh, getting above and holding $18. I got it. Starwood is a REIT, so tough environment for REITs until rates start going down. But let's see if you can establish an 18 bid. Crude oil is a little bit of a puzzler to me today with the China COVID concerns. You think it would be going in the opposite direction, but we did have you did clear the multiple highs at the 73.80 area, trading up to 74.47. So as long as you stay above the 73.80 level, path of least resistance looks higher. Not sure you're going to get to that next daily high in the crude oil futures. That comes in at 76.16. S&P's right back here towards the lows. We're going to be opening on the lows of the sessions here in just a couple minutes. Let's see here if there's any other stocks that I missed here. Lulu, Lulu. I haven't looked at this one in a while. On a tear. Oh wow. Oh, but this is getting dangerous. I mean, you had the earnings gap, the strong continuation, and now the fade here. So I don't know. All the way down, back down to 320, 321 and a quarter. But I don't know. After you have a gap and a go and then a retreat here, it looks like you have a strong round of profit taking there in Lululemon. Whether or not it will get down to that gap area remains to be seen. Churchill Downs had the stock split. It's been a nice run up, run into the split, run into the derby, working on a monthly red candle. Don't have any problems with that. Glad you had a good trade. So that's it, folks. We're going to wrap things up for today. This is Joel Khan, a pre-market prep plus. We'll be back with the closing print with Todd Gordon. Thanks for joining me.